Australia's banking industry is very unusual. It has only 4 main banks and serves a population of only 24 million people.
Yet, it is one of the most innovative in the world. To tell us more, we're joined by Janice, Head of Australia Global Transaction Services at Bank of America, Merill Lynch. Janice, welcome to Sibos TV.
Thank you, Jack.
Thank you so much for joining us. Now, you've worked in the financial industry in Hong Kong, Singapore, Malaysia, and now Australia. What are the key trends that you see across the Asia-Pacific region?
I think if there's anything that we have heard in today's first day session is that change is the only constant. I know it sounds cliche, but the reality is there's a lot of change going on amongst us, and the speed of change is what we need to keep up to. And there's a lot of driving forces behind, what these changes are. It's not just a trend for Asia Pacific, but it's a trend across multiple regions as well. One is the ever-changing regulatory environment. And you can say regulatory changes in the form of stricter tightening of regulations that could actually stifle innovation in some ways, because it derails us from focusing on innovating and focusing on anything that ultimately brings value and something new to enhance customer experience. But at the same time, there's also quite a fair bit of deregulation happening in other markets, in emerging markets in particular, because these deregulations are required so that the markets and the countries can actually compete with the other developed countries. So that's one. I think the second area in which we see a lot of change is really in technology. I wouldn't even call it emerging technology. I think the new technologies and the emerging technologies are already within us right now. We live and breathe technology on a daily basis. And it's what do we do and how much can we take advantage of the technology that's already here, the here and the now, and what we ultimately do to transform our customer service model to our clients. And last but not least, it's really the adoption in mobile. I mean, nowhere in this world, I think we agree, other than this part of the region, where you're actually seeing how quickly mobile technologies are adopted. I mean, 10 years ago, I would never dream of conducting banking on my mobile. Today, it's the only thing I know. I can't even tell you if I went onto my laptop and I tried to log in. I can't tell you the additional authentication that the laptop is asking me, because all I know is my thumbprint that goes onto my iPhone. And you can think about, you can look at China, for example. It's a classic example of how they've actually completely skipped a generation of payments. From cash, forget about checks. I know many economies, large economies at that, are still grappling with how to deal with checks and moving from analog to digital. But China has completely taken a leap of faith. I mean, it's nobody talks about cash now. I don't think anyone in the millennials generation has ever had a checkbook. Everyone is talking about mobile and digital wallet. So I would say key trend, change, and pace of change, speed of change. And how do we then, as financial institutions, react and adapt to some of these changes?
And let's take that concept of change, the dynamics, and apply it to Australia, a land of contradictions, that you've got a big country with a very small population. But how vulnerable is it to the macroeconomic trends that are being played out in other countries?
Well, what's unique about the Australia financial markets and the economy is the very fact that we've actually enjoyed 27 years of consecutive economic growth. I think people often take that for granted. Not many other countries can come out there and say, yeah, I've had 5, 10, 20, 27 years of economic growth. Australia is in a unique situation where it's a large country by geography. It's a small population relative to its size, but by no means is it a small economy. It is the 13th largest economy in the world. And I think, in terms of its vulnerability, I mean, we have seen strong population growth, aided by, certain loose financial conditions. For example, low interest environment. For 2 years, we've held our interest conditions. We've got a relatively weaker Aussie dollar in 2018. All of that have translated to quite a fair bit of boom in terms of, growth in infrastructure investment. And I think that in itself, says a lot to us in terms of the resiliency of the Australian economy going forward. Now, having said that, the geopolitical environment is changing. There's a lot happening in that space. And as a firm, our focus really is helping our clients anticipate and adapt to what some of those changes are, in particular in the risk management area.
And due to a lot of the factors that we're discussing, do financial institutions in Australia face different challenges to those in Asia or other parts of the world?
Yes and no. I think no, in that we are seeing a lot of changes taking place across the marketplace. And when you say regulatory environment is changing in one market, let's say China or in India, for example, the reality is a lot of Australian businesses also conduct business with these counterparties. So no change in one country doesn't impact the rest of the world. So I'd say, from that perspective, the changes that are taking place, the challenges that are being experienced and being observed in current marketplace is very much felt in Australia. Having said that, I think Australia has a bit of a unique advantage. Going back to the earlier point around, economic growth, less disruption in terms of, financial markets instability, and frankly, a relatively safe and sound financial system allows for Australians and the Australian banking sector to actually reflect and review the past, its current state. Are there opportunities for us to rise above and innovate, because we don't have all the other disruptions that's taking place in the market to derail us from actually focusing on what the customer proposition ultimately is.
And let's stay with the theme of innovation, because the financial services sector in this country is extremely innovative. So you touched on one reason as to why that is the case, but clearly there are others. But also, what does it mean for banks operating in this country, effectively 4 big banks?
I think it means that banks need to collaborate. At the end of the day, the pie is this size. Yes, with economic growth, with globalization, the pie can continue to grow bigger, but you cannot expect that the pie doubles and triples in its size. And we need to come together and collaborate in order to provide and transform the customer proposition. I would say that Australia has been able to innovate as a result of the growth and the stability that we've experienced. I would also say that we have to recognize that there's quite a fair bit of uniformity that exists within the financial services industry in Australia. For starters, we all speak English. All our clearing systems are only a handful in the entire country. It's nationwide. We don't necessarily have the complexities around tariff controls, around currency exchange and capital injection. So all of that allows for a platform for us to better ourselves, and ultimately it's on to ourselves to come together, look at our peer banks in the eyes, and the industry players as well as fintechs, and say we've got to come together and collaborate so that the model that we have today, we can actually transform it, not just domestically, but benefit everyone across the borders.
That is very powerful. And Janice, one of Australia's biggest recent innovations was its real-time payment system, the new payments platform, or NPP as we know it. What impact has that had on your clients since it was launched a year ago?
Yeah, so the NPP was launched in February of this year. And what it allows us to do is, if Jack, you and I wanted to go to a bar for a drink after this, and you paid for me, but you actually wanted the $6 back from me, I am able to...
Wouldn't be a very good friend in that instance.
But we don't know each other that well yet. Right. So I can instantaneously, through what is called a Pay ID. I do not need to have your bank account details. I don't need to have a BSB number. Just give me a mobile number or an email address, and I can instantaneously transfer $6 back into your bank account through that Pay ID. Plus, I could give you 280 characters as references, including a beer icon as an emoji. And believe me, consumers in Australia love a good emoji.
Love emojis.
They love emojis. So that is its current state at the moment. Now, at Bank of America Merrill Lynch, the customer base that we serve internationally, including in Australia, really are in the corporate and institutional space. So the MPP at its current state, in terms of its applicability, is probably somewhat limited. I mean, no one corporate organization wakes up and said, I gotta make that payment right now and I need it instantaneously. But they would love to receive instantaneously because it's liquidity and it's reconciliation. So I'm excited about the prospect of what MPP will bring when it implements the OSCO 2 and 3 overlay services, which comes with the ability to request for a payment, as well as data that can be attached to the payment itself for straight-through reconciliation. So I'd say watch this space. I think there's a lot of applicability to the corporate institutional space, not immediately in its current state, but certainly in the next 12 months.
And certainly people are watching because there's been a lot of talk about MPP at Sibos and also artificial intelligence, one of the big topics as well. So from Bank of America's perspective, what's being done with AI for your Australian clients?
So we've been very excited gearing up to the start of 2018. We've just launched an AI-based service to allow for our client base to achieve straight-through reconciliation. And what that means is if you are a large corporation receiving 1,000 transactions a month, and with each transaction, you could have 100 invoices attached to it. Sometimes you aren't necessarily able to tell specifically what you're being paid for. It's great you have the funds sitting in your account, but it works nothing for you if you can't apply cash. So the AI technology that we've deployed serves exactly that purpose and serves exactly that gap that corporates have. And that is in its ability to 100% on an accurate basis match what the incoming invoices are against the funds that have hit the bank accounts. And if there's not a 100% match, what potentially could be suggested matches? And we throw those as exceptions back to the corporate for them to manage. So today you could have, a receivables that is matched on a, let's say, 50% basis. Tomorrow with AI, and AI is hungry for data. The more data set you throw at it, the more it's going to learn and the more it gets better and improves. So if you were to be able to increase the accuracy, say up to 80%, effectively as an organization, you only are left with 20% that you need to manage as suggested match or completely unmatched items. And I think the power is really in our ability to take away operational tasks from our clients. Ultimately, as a business, what should you be focusing on? Your business. You should be focusing on growing your top and bottom line. You should be focusing on your customer proposition, not on receipting and matching invoices in the back end. That's something that the bank can do for you because the data is already there for us to manage and for us to analyze.
Some very exciting developments indeed. Janice Dang from Bank of America, thank you so much for joining us on Sibos TV.
Thank you for having me.
Pleasure.
It's been a pleasure.